Welcome to Put Paradise. Just want to remind you to head over to my website, putparadise.com, which is focused on options trading and provides training content to beginners. We're delivering consistent returns, potentially 50% annual rate of return, while trading for only 15 minutes per week. You can download my free guide called the Put Path Options Trading System, which is a checklist that outlines our trading methodology. Okay, today we're going to get into a day in the life of a trade. We're going to look at USO, which is our oil non-stock based commodity ETF, where we're looking at specifically a trade we put on yesterday. So if you look here, the bottom trade in your Robinhood app is USO for 64.60 put. Now, typically we want to get it $5 wide, but yesterday when I put this trade on, the prices weren't lining up exactly like I wanted, and the 64 delta was around 16, so I didn't really want to go up to 65. I felt that was pushing it a little bit, so we went with the 64 instead. So let's look at what happened yesterday. So we sold the 64 put and we bought the 60 put as protection. We sold it for an average credit of 33 cents. Now, currently, the price is 46 cents, so we're currently losing a little bit on this trade. You can see here the total return is minus 130, 39% loss since yesterday. You can see since we sold the 64 put, the USO break-even price is 63.67 because you take the 33-cent credit, you subtract it from your strike price, which is 64, and you get 63.67. Now the current USO price is 68.75, so it can drop another $5.08, which is roughly around 80%, 8% drop of where the stock price is currently. So where the Greeks are, you can see our delta is about at a 0.12. Ideally, over time, we're going to want this delta to drop to 0. You can see the history. So let's look at what we had yesterday. So yesterday was December 26th. We sold for a net credit of $330, used a quantity of 10. We filled at 33 cents. That was our limit price we put the order in at. So we got a credit for $330. Now, ideally, we're going to buy that credit back at a 2 cents for a max win in this system. So you can see the two legs. We sold the 64 put at the January 23rd expiration, which is our standard 28 days out, for 57 cents. And then we bought the 60 put as protection for 24 cents, which gives us a net credit of 33. So now we're at day one. We don't know what's going to happen. We don't know if we're going to win on the trade, potentially lose on the trade. So let's go back. So what I'm going to do now is I'm going to put my closing order in. So you click on your position, you go to trade, you hit close. So under the limit order pull down, you want to put time in force, good till canceled. Very important. Robinhood defaults to good for day, so you have to go in and put good till cancel. We're going to select all 10 contracts. We're going to put a limit price. Standard price is 2 cents. I like putting 2 cents in versus 1 cent. Some people put 1 cent in, some people put 5. But I found that 2 helps the orders close a little bit better, a little bit earlier, and more consistently. It's really important to close these orders out before expiration. Okay, so you see the total cost in there. It's going to be $20.40. So you've got lot quantity of 10 times 2. That gives you your $20.40 is your regulatory fees and so forth. Hit review. Okay, and it tells you what you're closing, your released collateral. So you're getting that 4,000 back. So how do they get 4,000? Because you have a $4 wide spread times 10 times 100 gives you the 4,000, right? So if we only had, let's say, one contract that we were trading, $4 wide would be 400. But since we're doing 10, it's 4,000. You look at the bottom, you see what you're closing. You're buying to close the 64. You're selling to close the 60. Then you go swipe up to submit. All right, now the order's queued. You hit done. Okay, so in the life of the trade segment that we're doing, we're going to check in at certain decision points throughout the trade. We're going to make sure that we're communicating any kind of decisions that need to be done. Hopefully, it'll just close at the 2-cent debit. But if there's anything that we need to close early to manage in some way, we're going to check back in and let you know how this trade goes. All right. So again, if you haven't checked out my website yet, pop on over to putparadise.com and you can start to learn. You can start to check things out. You can start to watch videos and let me know what you think. All right, welcome back. We're now on day 14 in the life of this trade. It is currently January 9th, and we are halfway through the cycle here, just checking in to see how this trade is doing. Okay, so we go down to our open orders. We have our 2-cent debit in for the USO trade at 64.60, expiring on January 23rd. Let's go and check the position. You can see here we're up 81% on the trade, which is nice. The original price of oil was around 68 or 69 when we originally put the trade on. Now it's up to 70.90, so it has gone up about $1. And you can see that that has benefited our position here. We have now a price at mid price of 6 cents. So we started out, we sold this we opened the position for 33-cent credit. Current price is now at 6, so it has moved in our favor. Total return is $270. And we've seen the Greeks. The Greeks now, the delta is only 0.03. The gamma is about half of what it was, and the theta is about half. So we've squeezed a lot of the time decay out of this trade already, just 2 weeks in. You can see that the sell is only selling for 14 cents and the buy is for 8 cents. So we have a net of 6 cents. So we're going to continue to monitor this. We already have our closing order in for 2, so most likely it's going to execute here next week, and we will check in and let you know how it goes. Okay, welcome back. We're now at day 3 in the day of the life of the trade. We're looking at USO. This was a trade that we originally put on December 27th last year, and we checked back in with it a couple of weeks ago, and it already had moved in our favor pretty significantly. It was at a 6-cent valuation at that point. We originally had opened it up for a 33-cent credit, and when we opened it up, we had put it in for a good till canceled order for a debit to close it and buy that spread back. So what we had realized here is a profit almost of max profit. We always put a 2-cent debit in, so we never quite get 100% profit. But basically, you can see the legs of the trade that executed. at the open on the Martin Luther King holiday, after the Martin Luther King holiday. So this executed on Tuesday. The You can see it was filled there on 120, which was actually 4 days before the expiration Friday on 123. You can see the legs of the trade. We bought a 5 cent close of the 64 put, and we sold a 3 cent of the 60 put. So ended up being a net debit of 2 cents, which was exactly what we had hoped for. So the total cost of that order was $20.80 because we had to pay for the regulatory fees. So just to let you know where USO was, if we go in here, click View USO, you can see USO opened up around, let's see, you can go from 9 to 10 o'clock yesterday. It was around 72, 72.31 at 9 o'clock. So it had drifted a little bit higher. I think last time we checked in, it was around 70 or 71. Now it's up at 72. So obviously, our position wasn't in trouble, and it was far above the 64 strike price. So excellent trade. This is exactly what we look for. We look for time decay. We look for an underlying that is moving in our direction or staying flat or even moving down a little, as long as it doesn't breach our strike price. So this is what we shoot for. We do 12 of these a week. We look for all of these various uncorrelated, diversified opportunities, and try to get 85 to 90% of these to close as winners. So if you're interested in learning more about put credit spreads and options, and go over to my website at putparadise.com.